Hi there, welcome to Kneppy Invest and welcome to November 7, 2024. We have about 25 minutes left of trading today. A little bit surprised about what happened. We are the day after the American elections and we had the first Wall Street session after the election results. And what a session it was. The Russell 2000 up about 5.8%, Dow Jones up 3.5%. NASDAQ up about 2.7%. Unfortunately, pretty negative day for gold, down 3%, and also silver down 5%. So I fully expect our gold sector to be down pretty big today, and individual companies, gold companies, to be down a fair bit as well. I wouldn't be surprised to see some gold companies down about 10%. That's the way it goes when commodities go up or down. You might see a bigger increase in a company's share price than what the commodity price has done. Now, I'm a little bit surprised that our market has sort of fluctuated from being up and down. In fact, at one point today, the SJO was actually down about 0.5%. I am surprised that the small caps or the small orders is down 0.81%. Now, I do think maybe one of the reasons behind that is the increased threat of tariffs on some of these companies' products. Maybe that's why it is down. But to be honest with you, the chances of Trump getting a presidency has always been high the last few months. So we've always had this as a possibility. So I'm not sure why there has been this reaction. Now you might say, well, it's a bit of a surprise because look at what Wall Street did. Now that's about certainty. We're certain who's going to be president. The market hates uncertainty. There was a lot of uncertainty about what was going to happen with the presidency and also the Senate. So we have a Republican in power, the White House, but also the Republicans have control of the Senate now. So there's a lot more certainty in America, and I think that's why the American markets, Wall Street, rallied overnight and hasn't really translated to us. Actually, I'm interested to see what Breville has done. That's one company I do own, and if I had to guess one company that might be negatively affected by tariffs, it might be Breville. It's down a little bit, but not down all that much. There has been some suggestions from a viewer of this channel, where is it? George, who has sort of mentioned that one of the reasons why EZZ Life Sciences is down and has been down quite a bit over the last few days is because of tariffs, and it's going to be harmful to China. Unfortunately, China's stock market is up today. So I think most people expected the Chinese stock market to be down because Trump got in power, but no, the complete opposite. Chinese stock market is up today, and I think the reason behind that is a greater chance of some stimulus. But I think EZZ Life Sciences share price is dropping because just some short-term negative sentiment. That's it. Share price had run up a lot, and now it's pulling back. I could show you the chart, but I'm not going to. Okay, so what's in store in today's video? Very similar than other videos. I won't go and talk about what I'm going to do, what the agenda is, because I do want to record another video, and I won't tell you what that video is on about just yet, but because I do want to record another video, I want to keep this video a little bit shorter than usual. And that means maybe not going through some of your comments. Okay, so let's get stuck into it and have a look at the ASX today. And again, I'm a little bit surprised to see some small greens. In fact, if I just refresh this, it could be red now. No, it's up actually, up a little bit more. Anyway, so let's have a look at the best and worst performing sectors and indices today. I'm not surprised by any of this because I do know oil is up. So that's probably why energy up 1.88%. Not sure why real estate is down 2.4%. So that's a little bit of surprise. So what I'm going to do is open up real estate. It could be just Goodman Group. If Goodman Group is down, that would mean that real estate's probably had a bad day because by far the biggest company in real estate is Goodman Group. But they're all down big. So Goodman Group, Centre, Stockland, Vicinity Centres, GPT Group, Mirvac, all down. Now, this probably means a greater chance of now I wouldn't say interest rates rising, but a greater chance that interest rates won't drop as much. In fact, the best way to see this is having a look at bonds. Oh yeah, look at that. Yeah, yesterday the bond yields rose 4. And that just goes to my thematic that I think the bond market is believing. In fact, the bond market has always thought Trump was going to win the presidency. And then their second order thinking was, well, if he wins the presidency and he puts these tariffs, that's going to lead to another round of inflation, increasing interest rates, or possible increasing interest rates. So That's the dynamic at play here, and that's why I think real estate has had a really bad day today. So hopefully you haven't got many stocks in real estate. Hopefully you have not heavily invested in real estate and gold, because as we turn our attention to the indices, gold, XGD, down 6%. That's a little bit of a surprise. I did not expect it to be down 6%. That's a pretty big decrease. And I do think the market is overreacting a little bit, because if we go to the gold chart, nothing to be concerned about. There was a little bit of a dip, but that's about it. Price of gold dropped 3.1%. So it's a little bit of a dip, but possibly the market is now expecting gold to drop even further from here. And if that's so, I can sort of understand why people are now selling out of their gold stocks, because possibly sentiment, particularly the short-term sentiment, has changed. Maybe even the medium and longer term sentiment is now changing for gold, but don't really see it on the chart just yet. Want to have a look at the ASX 20, because up 0.25%. I expect maybe 10 companies to be up. No, we'll say 12 companies up, 8 down, but I am in a little bit of a rush now. Okay, so let's have a look at the best and worst performing companies on the ASX. And this is where it might become interesting. I do have a top 5 stocks of the day, but I am willing to change my top 5 if I see something interesting in these scans. So let's have a look at the top gators. Okay, quick step. This is not a surprise. Quickstep up 93.6%. There is a takeover for Quickstep, and when there is a takeover for a company, I'm usually not going to spend too much time on it, because the takeover price is about 40 cents. I've followed this company for a long time, and I've been continually disappointed by their financial performance. So I'm not sure why anyone is wanting to take over this company. The share price has been all over the place the last, say, few months. In fact, I'm going to get rid of this because I'm giving away what I'm doing, why I'm going to do this video. But if you go look at the weekly chart and go back many, many years, just this company has done nothing, absolutely done nothing. And so I'm a little bit surprised that someone is trying to take over this company, although maybe they see some value. Anyway, that's what I'm going to talk about when it comes to Quickstep. There is a takeover bid for that company. Propel Holdings up 77.8%. On fairly low turnover. That sort of percentage change, I'm a little bit intrigued. I wouldn't be surprised it's been nothing. Yeah, it's been nothing. Nothing's happening. Let's see what else we got here. Sigma Healthcare. Okay, Sigma Healthcare. Don't have to discuss that company because it's in my top 5 stocks of the day. And in fact, I'm going to give it away right now. Sigma Healthcare is the stock of the day, up 23.4%. And for anyone who has been following Sigma Healthcare, probably knows what happened today if you haven't looked at announcements. What else do we have here? A company called TrivarX. TrivarX, a company I've never heard of. I do want to discuss this company briefly. In fact, I have put it into my top 5 as sort of a dual top 5, coming into a position with another company, if that makes sense. So 2 companies coming in with one position, both spec companies or story stocks. And this company called TrivarX is one of those companies, up 27%. On okay turnover as well. It's fairly low market cap. What else do we have here? Forbidden Fruit did release something, but share price is fairly low and low turnover. And Archer Materials. The other company, the other spec story stock that I was going to put alongside TrivarX in at number 3 is Archer Materials, up 15.4%. I think it's okay to talk about story stocks if you know their story stock and there's a lot of risk. Paragon Care up 14.9%. That's probably because, I assume, because of Sigma Healthcare, because there is a merger happening between Paragon Care and another company. And I think there's a greater chance now that merger does go through. And MoneyMe. Did I put MoneyMe in the top 5? Yes. I put MoneyMe at number 4. Share price of that company up 13.6%. Okay, let's have a look at the market cap. Computer share up. That's another sign of interest rates won't fall all that much, or maybe will rise, because the computer share is, or their share price is correlated to interest rates. So if they're up 5.4%, that's telling me that the market is now thinking that interest rates won't drop all that much, or maybe even rise. What else do we have here? Neuren Pharmaceuticals. I did not want to include that company in my top 5 stocks again, because yesterday it was the stock of the day, but up 7.76%. So I might just briefly touch upon that company. Not sure why Credit Corp is up. John's Ling Group is up as well. Prune Energy, very happy that's risen a fair bit. What else do we have here? A few story or speculative tech companies are up, like Weebit Nano, Titomic, although Titomic is better than Weebit because at least it has revenue. Anyway, so let's have a look. Look at Fidelity Global Emerging Markets Active ETF. So that's interesting. That's rallying. Now let's have a look at the top losers. And I fully expect one company to be in here. In fact, it's at the top. Merino and Co. I've talked about this company a few times now, and it's been a really good performer, down 46%. So I had discussed that company because it's down 46% in one day, highly volatile. And I do think there's probably a lot of day traders in that company, so I'm staying clear. Plus, it's just a recent IPO, and I don't buy into IPOs unless they release a positive announcement. Talking about gold, Catalyst Metals down 17%. Spartan Resources down 16%. Spartan Resources did release something, but I think the share price is down because it's gold. I'm a little bit surprised these companies are down that amount, but it's not surprising. And now let's turn our attention to the worst performers by market cap. Westgold, this is going to be full of gold companies. Westgold down 7.9%. Resolute down 9.4%. Drone Shield, I suppose I can understand that. Probably now there's going to be less need for Drone Shield's products in the Ukraine-Russia battle. That's what the market is thinking, I'm pretty sure. Chalice Mining down 11.24%. I've been thinking about trading that. Andean Silver down 7.79%. Not surprised. Intelligent Monitoring Group down 8%. I did not know they were back to trading. They were in a trading halt, if I remember correctly, for a capital raising. And silver, some other gold companies here as well. Rox Resources. I'm pretty sure that's a gold exploring company. Okay, let's have a look. Actually, no, before we get to the top 5 stocks of the day, let's briefly have a look at IMB, or Intelligent Monitoring Group. Share price down 9%. Yeah, capital raising. Oh, actually, the reason I missed this one is because they released it at midday. And I'm well away from the computer at that point in time. And I'm going to miss announcements on occasion. But the majority of what's a word to say here? The majority of interesting, intriguing announcements are released before the market opens. On occasion, you will see some interesting announcements trickle through the rest of the day, but most of the time, I would say 80 to 90% of interesting announcements are released before the start of the day. Here's one where they released it at midday, so halfway through the day. So DVL acquisition. Now, this company is highly acquisitive, and I'm not the biggest fan of these sort of companies who just acquire and acquire and acquire, and to acquire, they have to raise capital. We have seen this in quite a few companies who have this model. Some do succeed, but many others fail. And when I say fail, I mean the share price might rise, but because of dilution, the shareholders' value or their wealth actually goes down because of dilution. Anyway, so they're raising some money because of an acquisition. And the capital raising price is at 48 cents. So what's the share price? 45.5 cents. So that means the market doesn't like this capital raising. And why would you buy shares? Wasn't much of a discount, by the way. Previous close was 50 cents. So not much of a discount. In fact, share price actually opened higher. Why? Why would you buy shares at a higher price? It's just silly. So DVL acquisition. I do know there are some fans of this company, but I'm not the biggest fan for a few reasons, which I have touched upon. And let's have a look at the chart. Let's be really quick. Intelligent Monitoring Group. We have to go to the daily chart, not the weekly. In fact, the weekly chart looks pretty negative. And the share price just keeps on dropping. 5 big down days in a row. And I would say the shares in this company are now oversold. Huge volume coming in the last 3 days as well. Now let's turn our attention to Neuren Pharmaceuticals. Now, if this wasn't my stock of the day yesterday, this would have come in pretty high in the top 5 stocks today. But I just couldn't put it in twice in 2 days. Share price up 8.7%. We're now in the closing auction, and there's a possibility the share price might be up 10%. So the first announcement I saw this company release was pausing trading. I was like, ooh, what's happening here? Then they released 17 minutes later, Q3 2024 update. So I had to stay at my computer waiting for the reason why their shares were paused. So typically you see a pause in trading during trading or about 10 minutes before trading begins. Now, if a company wants to go into trading halt before that time, you just see a trading halt announcement. You don't see pause in trading. Anyway, so obviously, third quarter 2024 update, share price up 8.7%. This is positive. Whole reason why the share price of this company has been dropping is because of the recent update. It was negative. Now we have a positive update. So this, by definition, should lead the share price to rise from here, but it doesn't happen like that. So it's all good. Everything's moving in the right direction. So debut net sales for 9 months exceeded the full-year threshold of 250 million for Neuren's first sales milestone income of $50 million US. You're also going to receive third of this priority review voucher as well. Quarter three royalty income of 13.2 million. 9 months to date, 37.5 million. A full year 2024 income expected to be between 216 and 218 million dollars. So I have no complaints about this particular update. Seems like the market is not complaining either. So let's have a look at the chart again, because this might be looking a little bit more interesting. Yeah, not really. I'm not there just yet. I just know the last time they released an update, the market had a hissy fit and the share price sold off, and now the market's wrong. The share price kept on dropping, and I think the market thought that debut sales were coming, or the increase in debut sales were coming to an end. That I had no idea. Maybe that's what the market was thinking, and I think what the market has seen now, has realized now, maybe they were wrong. Market sometimes can be wrong, but overall, market is right most of. Well, not right, but it's nearer the truth than most individual investors, including me. Okay, so let's get to the top 5 stocks of the day. And coming in at number 5, we have another bank releasing their results. National Australia Bank down slightly. I fully expect it to be down way more because NAB is one of those overvalued banks on the ASX. So share price has increased maybe 40% in the past year, which means the market expected some pretty good growth in profits. So let's have a look at the growth in profits for NAB, because that's what the market should be expecting. That's what we should be seeing if the share price has rallied 40% in a year. If we don't see a profit, then why the rally? Just doesn't make sense. Okay, so I'm talking, you probably know what happened. Okay, so let's have a look at the results for NAB. Profit, down 6%. Cash earnings, down 8%. Now, I think they've kept the dividend steady or just raised it a little bit. I don't think they can drop it because that would cause a little bit of distress, a little bit of stress from their income shareholders. Group common equity, T1, CET1 or CET1 ratio, 12.35%. The Australian economy has remained resilient, they said. However, the impact of high interest rates and cost of living is challenging for our customers, and we are here to help them. I'm sure you are. Wink, wink. Not surprisingly, or not unsurprisingly, asset quality deteriorated over financial year 24. Asset quality deteriorated, yet the share price of the company has risen 40%. It just doesn't make sense. These companies, these banks aren't going to grow. In fact, they're more likely to drop. And so that's why the rise in share price over the past year has been really surprising. And that's why these banks are now significantly overvalued. We're seeing their profits dropping, not rising. That's what you want to see when you invest in a company. You want to see their profits rise over time. So NAB, according to CommSec, has a P/E ratio of 17, which is way too high. Dividend yield of 4%. Why? You can get better, probably, term deposit rates than 4.3%. Anyway, that's what I'm going to discuss when it comes to the banks in NAB. Anyway, share price down a little bit. Who cares? Coming in number 4, we have MoneyMe, a competitor. Well, sort of a competitor of NAB. That's the other thing. There's all these competitors popping up. There's going to be way more options when it comes to mortgages and loans, other than the banks. So these increasing competitors are going to see the market share of these banks actually lower over the next 5-10 years. So that's another reason why I just don't think the banks are good longer-term investments. There's just no growth. Now, I could be wrong. Of course I could be wrong, but I'm just talking about the most likely scenario moving forward. The banks just don't grow. In fact, the CBA CEO, which I forget his name, even said that the growth period for this bank has come to an end, but We have lower risk now. Yeah, anyway, which makes sense. If a bank or any company is growing at a really good rate, there actually is increased risk. But when you see that risk come out, decreased risk, then more likely there's no going to be much growth. So it's like a risk reward sort of situation. The whole reason we invest in equity, equity markets is because there's a higher risk. So we are more likely to get a better return. And I just don't see that with the banks. Anyway, moving on to MoneyMe. Share price up 9%. I was hoping it was going to be up a little bit more. They did release, I'm a share of this company, by the way, I'm trading it. First quarter trading update, 62% growth in loan originations. So this company is growing. Go MoneyMe. I'm just trading this. This is not a long-term holding for me. So I was a little bit intrigued by this because if it's bad, the share price might collapse, and then I might have to sell out of my holding, my trade in this company. But if it's a really good update, then maybe I could add to my position and then just ride that position as long as possible. But this is a positive update in my opinion. So we're seeing nice increases in originations, gross loan book balance increased to 1.3 billion. This is the only thing I didn't like. Gross revenue of greater than 50 million. Well, it could be 50 billion and 50.1 million, 50.2 million, 51 million, 55 million. And the reason I say that is the last two quarters we've seen 54 and 55 billion. So I would like to see, or would have liked to see a number there instead of greater than 50 million. Maybe there's a reason behind that. Net interest margin, 9%, a little bit lower. So a little bit decrease there. I'd like to see that at least steady, if not increasing, but there is a reason for that, from a continued shift to secured lending, accounting for 68% of originations during the quarter. And net credit losses decreased to 3.8%, down from 4.5% last quarter and 4.4% the previous corresponding period. So things are moving in the right direction for this company. And I do think there is definitely an argument that this company is this company is cheap. I was going to say this bank. This company is cheap alongside many of this company's peers. There's quite a few companies like this on the ASX. So this is one of them that I am trading. And I have thought about taking positions in a few of the other companies. So Resimac or there's plenty out there. But MoneyMe's chart was the most intriguing to me. So let's have a look at the chart for MoneyMe. And I am trading this, by the way. I think I've already mentioned that. Anyway, so there it is. So there is me buying some shares at 10 cents. And I thought 10 cents is going to break. It took a while for 10 cents to break. It's a really natural, strong resistance level. And it broke in August. And I'm going to say it's confirmed because share price hasn't touched 10 cents for about 3 months. I would like to see the share price get above 15 cents. Share price got to 15 cents about a month ago. So I need to see another high before I get even more excited than I am now. We did see a little bit of a pullback, but that's okay. Share price, I think, has found a bottom, and now it's trying to turn up again. Anyway, so that's MoneyMe. Now, coming in number 3, we have these 2 spec stocks. One of these I've never heard of, and I'll talk about that second. First of all, we have Archer Materials. Share price up 17.3%. Closing auction will be completed in the next minute or so. Miniaturized biochip GFET design improves foundry readiness. Now, I'm pretty sure this company does not have any or much revenue. Let's have a look at the most recent Appendix 4C. Does this company have any receipts? And if they don't, this means this is a pure story stock. It's just a story. And the problem with story stocks is we just don't know if they're going to be successful because there have been great stories throughout history that were never successful. And that is the biggest questions about these sort of companies. Will they be successful? They could have great technology and still not make it. There's a lot of things that go into a successful company. Timing is one of them. Marketing, being at the right time, right place, right time, that sort of thing. Timing in terms of where we are in the economic cycle, that's very important as well. Having the right people in power, CEO, management is very important as well. But Archer Materials does not have any receipts. So this is a pure story stock. But I'm always looking for these sort of stories just to put these companies onto my radar. Now, most of the information in this particular announcement went over my head. I'll be honest with you. Had some nice pictures here. I have no idea what this means. Miniaturized GFET size has been reduced by 97%, decreasing the cost of fabrication. That's good. But here's this little, they've got a nice little picture here. That's pretty small. That is pretty small. And I can see why they're calling it a miniaturized product. It looks like it is miniature. Not as miniaturized as some other products I've seen. Some of those other chips are really, really small. You can't virtually see them. Anyway, so the market's like this one. And the other reason why I've decided to include Archer Materials is because of the chart. In fact, if the chart didn't look like this, I probably wouldn't have included Archer Materials because most of the information went over my head. I just have no idea about the product and this company. But this chart does look more interesting. The reason it looks more interesting is if you just get rid of these two ribbons and maybe just have this in. No, not that one. Not that one either. No. What I saw here is all I'm looking at is bottoms here and highs. So troughs and peaks. And we have seen the most recent low higher than the previous low. And also today, the share price went above the most previous high. So we have the possibilities of the beginning of an uptrend in this company's share price. We saw it at the start of this year as well. Looked like the share price was trying to move into an uptrend. But this is a little bit of a better signal. So we're seeing one little upswing, and then we saw a bit of a downswing and another upswing that has now reached above the top of the previous upswing. And the bottom of the downswing was higher than the previous low. So this has the beginnings of a potential uptrend. And the other thing is the share price, as I mentioned, went above the previous high. And that high was important because if you draw a line right there, that sort of line touches the last two highs. So that's important. Share price now has got above the last two highs. But the last time share price was this high wasn't that long ago. We're talking about the start of August. So it's only about a 3-month high. So it's enough, but I would like to see a little bit more proof the share price is moving to an uptrend. But again, a story stock. But these sort of things or companies, you can see a lot of hype in these companies, and that hype can push the share price up a lot. So don't be surprised if the share price of this company, quadruples, 5 or 6 tuples, or I was going to say 5 tuples, whatever. Anyway, so that's Archer Materials. I have heard of this company before, but and I haven't looked at Archer since about here, late 2021, because the share price was in a beautiful uptrend, and that came to an end, and understandably so. The next company coming in number 3 is, I don't know the name, but I do know the ticker code. It's TrivarX. I have never heard of this company before. Share price up 26.67%. You notice the healthcare equipment and services. This is an announcement today, and they've used a special, acronym. New AI tool. AI tool expands patient reach and market opportunities. So let's have a look to see if this company is a pure story stock. And do they have any receipts or revenue? So if they don't, this is a pure speculative company. You're just speculating on the future. You have no idea. And this company is a pure speculative stock. Not a lot of spending either. In fact, only $381,000 on administration and corporate costs. So no money spent on product manufacturing and operating costs. No money spent on advertising and marketing or research and development. Or they did spend $529,000 on intellectual property, which is capitalized R&D. So they are spending money on R&D each and every quarter. Do they have much cash? Not a lot of cash. Okay, so let's have a look at what this company does. In fact, I could have shown you in that previous announcement. So healthcare equipment. So do they have some sort of healthcare equipment they're trying to sell? So let's have a look. TrivarX is a mental health technology company pioneering the use of objective measures to aid in the early detection and screening of mental health conditions. The company was founded in Australia with offices located in Perth and Minneapolis. That's interesting. It's listed on the ASX and trades on the OTCQB venture market. Okay, so what is this announcement in regards? It's got the special acronym AI. Groundbreaking advancement of depression screening tool significantly broadens patient reach and market opportunities. I'm not going to go through all the science in this because, again, most of this probably goes over my head. Talking about phase 2 trials. So Yeah, I think one of the reasons why the share price has rallied is because they use the word or the acronym AI. And I do think there's a lot of participants in the market who just see the AI and go, oh, got to buy this company. It's an AI company. That's the rage at the moment and might be the rage for the next few years. So let's have a look at the chart for this company. Chart of a company I've never heard of before. TrivarX. Maybe it's just a recent listing. I don't know. Actually, no. They might have changed the name. I reckon this company changed its name. I'm betting this company changed its name. And they also did a capital consolidation as well. I reckon that's why I've never heard of this company. Yep. TrivarX, formerly Medibio. Yes. I have heard of Medibio. They've just changed the name. Okay, that actually does make a little bit more sense. Now, first thing I see when I look at this chart is no way, Jose, not for me. Share price in a downtrend, and even after today, share price still in a downtrend. In fact, we have seen a fair bit of selling today. Share price reached a high of 2.4 cents, which means the share price was up at one point today by, what's that, 60%? And it's only up by 20% now. Because why? What? I'm asking why. Why has it been selling today? It's pretty obvious, isn't it? For most of this year, the share price has been significantly higher than it is now, even at 2.4 cents. We had a lot of shareholders who bought between 2.4 and 4.4 who are now significantly underwater, and they just need to get out. They just have to get out. They don't care that this company might have promised. They don't care. The share price has dropped. They need to get out. And even though there's been a pretty big volume today, it's not enough. There hasn't been enough buyers coming in, and those sellers have just pushed the share price down to 1.8. They just have to get out. So that's TrivarX, a new company, a company I've never heard of. Well, they've changed the name. That's probably why. Okay, let's talk about Mid-North Coast, which is what I like to call Merino and Co. Share price down 53% today. Now, the last few days, the share price, look at that. Look at this trade history for Merino and Co. So they listed on the 30th, share price up 410%. Then the share price went up 13%, 75%, 92%, 62% in consecutive days. Something is going on here, and I need a drink. It took the ASX enough time to give this company a price query. Yeah, I'm surprised it took that long. And the company did receive a price query. They went into training halt yesterday. Query, interesting notice of initial substantial holder. Who's this from? AWN Food and Fiber Holdings. Okay, whatever. So they did receive a price query and they responded to it. And either the market didn't like the response or this is just profit taking. Share price down, that's really interesting. Share price down 77 cents. The share price now is 68. So share price has fallen more than the share price is right now, which makes sense because the share price is down 53%. So simple mathematics should tell you the share price drop is more than the share price currently. Yeah, stupid Michael. Anyway, Merino Co. Is there anything interesting in this particular announcement? That's the most thing. So if you have never seen these sort of announcements before, company gets a price query. First question is, do you have any information that you have not released to the market that is price sensitive? Or another way, is there any insider trading happening with your company right now? Typically, the company says no. If they say no, they don't have to answer question 2, but they do have to answer question 3, which is, do you have any other explanation why the share price of this company has risen from 20 cents to $1.40 in 5 trading days, which is stupid, which is ridiculous because you have not released anything. And usually do see sometimes a nice explanation from the company, some reasoning why the share price might have rallied. So let's have a look. So they say no to question 1, which is what most companies answer with. So not applicable in question 2. Question 3 is where you might get some interesting information. So let's see. The company can only speculate that the increase in price is a result of positive press exposure following its successful listing on ASX, which has raised its profile. Now, the only thing that might have raised its profile isn't really the company, it's the share price performance. That's the only reason I've known this company to exist, because the share price has increased. I'm not sure if they're absolutely right with that. Maybe there has been some positive press. I just don't know. But I think the main reason there's been chat about this company is because what's happening to the share price. And again, share price down 53% today. Share price also finished at its low. You could have sold it open at $1.29. And share price is at its, oh, no, it's not, 68 cents. So anyhow. I'm not even going to show you the chart because it's only been trading for a few days. Okay, so coming in at number one, the stock of the day, Sigma Healthcare. Share price up 25%, which is a bit of surprise. I'm shocked. Well, I can sort of see why it's happening. So we now have, so Sigma and Chemist Warehouse want to get together, or I call this a reverse takeover because Chemist Warehouse is by far the better of these two entities. In fact, I would almost say Chemist Warehouse is a high quality company. Sigma is definitely not. So I think this is a reverse takeover, and Chemist Warehouse is absorbing Sigma Healthcare. Now, the market has fallen in love with the idea of Chemist Warehouse being on the ASX, and I do think that the share price of this company now, Sigma Healthcare, alongside Chemist Warehouse, is way too richly valued, sort of like Guzman Gomez. And I think one of the reasons behind that is we've seen such a dearth of IPOs. If a company IPOs, particularly a company like Chemist Warehouse or Guzman Gomez, if they list on the ASX, there's going to be a lot of fanfare. There's going to be a lot of people wanting to buy shares in that company, even during the IPO process. So in a way, this is not surprising, but if you do look at the valuation of Chemist Warehouse, this is a little bit too rich for my liking. And I actually did that when this merger was announced. I actually did look at Chemist Warehouse. Great company. I do think it's a high quality company. They have a moat, really good business model. But again, there is a price to pay. And maybe this price is a little bit too high for my liking. So let's have a look at a chart for Sigma Healthcare. In fact, there was also a risk if this proposed merger was not accepted by the ACCC. The share price of Sigma was going to drop a lot. But I think the market was surmising, based on probability, that this merger would not be stopped, and it hasn't. That's why the share price, I think, went a bit of a rally back in October, start of October, and share price now at $2.44, significantly higher than it was when this merger was announced. So that is the stock of the day, and that is the video of the day because I want to record this other video. So that's all. And don't forget, if you want a financial advisor, I'm not a financial advisor, so if you want a financial advisor, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.